What are some common mistakes that you see average Joes making when they first start investing? So like
Okay.
when you're first getting into it.
I think there's three folds of mistakes here. I think one thing is you just have to like start. I think the second thing is they overthink it a lot. And the third one is they don't put enough money in. They're just too scared. I feel like people like just trying to overthink it, be the smart guy, right? Because there's so much research out there.
There really is.
And it's kind of overwhelming. I don't have enough time in the day to read all of it, right? And
No.
like, imagine if you're just an average Joe and you have the whole internet and you're like, okay, which one's good? Which one's bad?
Right.
Like, what do I do?
You're on Twitter, you're on Reddit.
You go down the rabbit hole and you're like, okay, I got this. I figured it out. I read like 20 articles. I'm a genius now.
Yeah.
And you're like, I'm the smartest person in the world.
Yeah.
And you're trying to like go in and out of stocks and time things.
Right.
And it like it ends awfully because
Every
like
time.
you don't know what you're doing. Most like advisors or like portfolio managers, they don't beat the S&P 500.
Yeah.
Okay, so first off, S&P 500 is just like it's just like what the market is almost, the stock market
It's like a
essentially in the
gauge for the
US.
total stock market.
Yeah,
That's right.
right. It's basically like if you're doing better than that, you're doing really good. And if you're doing worse than that, well, you might as well have just been in the S&P 500.
Right.
Essentially what the S&P 500 is right there. And so most people that get paid to do this for a living, I don't know what the stat is, it might be 50 to 60% of them do not beat the S&P 500.
Which is crazy.
So like your full-time job
Yeah.
and you can't beat it.
And you sit there and think you can.
And then yeah, you're an average Joe and you think you can, right? And the reality is you probably can't.